check, mic check. Do-do-do-do-do-do-do. Bear with me. I'm just getting my lunch set up. I've been trading and teaching all morning. Need a me moment. Is that what they call that? A me moment? Need a me moment. Not much of a lunch. And I see some of you guys are fizzling in here. Cool. Mr. Green here with Trade Phantoms. Welcome. Just giving y'all some time here to get in. All right. All right. So what are we gonna do today? We are going to look over some basic institutional order flow with supply and demand. Those of you that are members of the community, welcome. What's going on, Duke? So this is basically, and this is, YouTube is a way for us to reach, potential new members. Let them see what we do, see if we're a good fit for them. Obviously, I know there's a lot of people in here that are already members, but this is still beneficial for you as well. Trading's all repetition. So what we want to do is obviously, those of you that were just in my advanced class know that we just, did some some advanced stuff with some economics and central bank stuff. But we're gonna go right to the root of this and look at some institutional order flow, which is basically the objective. If you're learning to trade, okay, which is why you would be on this YouTube channel right now. What you're doing is you want to learn to do it professionally. And all that means is consistency. That doesn't mean that you're going to quit your job. I mean, you could quit your job, but it doesn't mean you have to quit your job. You're learning to be consistent and make a consistent stream of revenue. All right. The failure rate in trading and investing is very high. And that is most likely due to the fact that people try to self-teach themselves and they don't get the proper training, proper curriculum. There's a lot of good stuff out there on the internet. There's a lot of bad stuff. There's some stuff that's good and it doesn't take you all the way, but it gets you to a certain point. I believe here and we believe what we do here, it covers all those bases. I've been in this industry for quite some time, trading and consulting, teaching. And yes, that is what we're all about and what we're doing. So what I'm going to show you is institutional order flow is really something that is a strategy that professionals use to trade and invest, and it gives people an opportunity to be able to do any market. Now, I'm going to focus on Forex because that's what I specialize here at Trade Phantoms, but institutional order flow is good for options, stocks, futures, cryptos, etc., right? So let's start, and we'll start. Those of you that are brand new to Forex or don't know about Forex, basically what we're doing here is, I'm going to just look at a chart. I'm going to remove all my drawing tools first. I'm going to look at something called Aussie dollar. In the foreign exchange market, you're doing a couple things. You're buying one currency and you're selling the other. So when you're doing that, you're bullish on one, bearish on the other. But you're gonna, the name of the game is learning how to do this through reading charts, right? So any chart, anybody who wants to stay consistent in this business needs to learn how to read a chart. That's first and foremost. And learning to read a chart, I don't care how much you think you know, is usually looks like hieroglyphics at first. So we're gonna start off basic here, right? You got candlesticks. Candlesticks represent time movement. They represent price movement, time duration, etc. When you're learning to read a chart, anybody that I've ever met that's any good at this always start high, go low. Top-down analysis. High, go low, okay? And if you got to come back up again, that's cool. But you always want to look at the macro view and then go down to the micro. Give me a yes if that makes sense while I butter up one of my tuna fish and crackers. Tuna fish and crackers. Don't get no better than that. All right. So I'm going to do something called creating a range on my high time frame. So I'm on a monthly chart right now. I want to look for supply and demand. Supply and demand, demand is where people buy. Supply is where people sell. And banks and institutions control that because they have the money. That's simple. That's simple. All right. So I'm going to look for areas that I see imbalances of order flow. All right. Demand is always going to be down to the left. All right. Now, right here, I see it. You may not see it. Right here, I can actually see something small. I don't know if it's pure yet. I'll talk about purity in a second. But right here, there's a little level right here on monthly demand. I'm going to chart it up for you. And there's an imbalance there. And you can already see that it worked once. So you have yourself right where my finger is, right where my finger's pointing. I circled it. If you look at this big red candle here, these are all monthly candles. You have a drop. There's a little doji candle here in the middle, a base, and a rally. Now, basically what happened here, past tense, institutions bought heavy. They bought heavy, but not all their orders necessarily got filled. And I would say they definitely didn't get filled, but you can't say absolutes in life, right? So 99.9% of the chance banks and institutions do not get filled on that first shot, right? So now they're sitting there and, there's unfilled orders. And look what happened when price came back down. Look what happened. Price came back down, hit the rest of those orders, or not the rest of them necessarily, but some of those orders, and pop back up. So this level's already been touched. But it's just a showing you that banks and institutions control the market by leaving large amounts of unfilled orders at certain pricing points, okay? That's what they do. They don't cancel. If an order doesn't get filled the first time completely, let's just say, for example, they tried to do 10 million units here, okay? Units is what you use in FX. And let's say 5 million of them got filled. Still a lot. It's probably more like 50 million units, but I'll just keep it simple for hypothetical. And right here, half of them got filled. They're still going to leave and that half is still going to push price up. So they probably, they move the market from here to here. Price comes back up, and you can see prices can continue to come down. Now this level for me is not pure enough. So that's a little advanced. I'm not going to go to that. I just wanted to give you a little basic point of what I'm doing here. All right, I'm going to create a supply level. And it's all about, I call it clean charts. I like to have my charts as clean as possible. And this isn't even an indicator. It's really not. I mark out a Fibonacci just so I call this my football field. All right, this just helps me realize where I am with supply and demand, okay? Now, trend is another thing. All right, if you have an uptrend, you're buying. If you have a downtrend, you're selling. Okay, so, what do we want to do? Do we want to buy low, sell high? Or do we want to buy high, sell low? I want to wait for prices to come back. So I start looking here. I start looking at some of these orders. Start looking at some of these levels. And basically back in, now I just went down to a weekly chart. All right, on this weekly chart, I have an uptrend. So what did I do? I went monthly. Monthly, I'm middle of the range, middle to high in the range. Weekly, I have an uptrend. And then daily, what do I say? You got to look at multiple time frame analysis. Now I'm looking for a level to enter, and I do have a nice looking level right here. So I'm going to highlight this for you. Now I'm going to control this whole level. Now, so basically right here, what happened is you have a drop. You have a drop, a base, and a rally. Drop, base, rally. Institutions bought heavy in this level, but did not necessarily get filled. All right. So now there's a high probability, not a guarantee. I'm just trying to train your eyes to these levels, because there's a lot of levels on a chart. And, you know, what we do in Trade Phantoms and Essentials is we give people the opportunity to work with Mr. Black and the Essentials, you know, and I would recommend following Mr. Black either on here or on TikTok, Mr. Blue as well. But, you know, part of Trade Phantoms Pro is learning to see what levels are good and what levels aren't. Now, this is a pretty good level, okay? And you can already kind of see that, because look at this wick right here. Look at this candle wick. It already came down and basically punctured it. Didn't make it all the way down there, but that just shows you there's so much buying, but there was so much buying pressure right here. Here's another area where demand worked solidly, okay? Now, there's another couple other things that we want to talk about. We want to talk about a three-prong approach, right? You're always going to have an entry. You're always going to have an entry to go long or to go short. And then you're always going to have a stop loss and a target. Professional traders know what the outcome of their trade for loss, either loss or gain, before they place it. That's a common problem that most people trading don't have. They buy, they get in, and then they say, what should I do? Should I sell? And then they turn into three of my favorite people: coulda, woulda, and shoulda, okay? Look, here's the deal. When you get in, you should already have a predetermined stop loss set up. So, you know, we're going to tell you with risk management rules, never risk more than 2% of that trade, 2% of your account. So it's account agenda. So if, let's say you got $10,000 in that account. Say you get $10,000 in that account. Okay, 2% of 10,000 is $200. All right, you could do less, but I would say never risk more than 2% of your total. Hey, what's going on, Cool J? What's going on, man? I would say never risk more. All right, you could do less, but let's just do 2%. Then we would say never take less than a 3-to-1. So 3 times 200 is 600. You could do more, but just for hypothetical reasoning, let's just do a 3-to-1. 3-to-1 would be somewhere up here. I'm just going to guesstimate. Okay, it's somewhere up here. So your entry level is going to be this first line. I'll write it on the screen for you. Remember, entry could be going long or short. In this case, we're going long. That means we're going to be bullish, all right? Stop's going to be down here. So this is called a bracket order. This is having a plan. This is having a plan coming into a trade, all right? Now, if you follow these risk management rules properly, mathematically, because that's all it is, to break even, you only have to be right 25% of the time. So if you're right 25.1% of the time, you're making money. If you're right 30% of the time, you're doing pretty good. If you're right a coin flip, you're crushing it, okay? You know, and we show that in the workshop. So we try to tell a lot of people, when you get started with us, it's good to get started with a complimentary workshop class, okay? I'll talk about that in a second, but let's finish up the trade here. So basically what I've done here is price is right here. Now, what do the rookies do? They chase price action. We don't want to chase price action. Yes, we want to go long. We're bullish on this currency pair. Okay, we want to buy Australian dollars and sell United States dollars. Yes, that's what we want to do. But we don't want to buy at tops. We want to wait for retracement. So now the next question that you just said, Mr. Green, how do I know when there's a retracement? That's what the charting's for. And I showed you that little level there. And I've showed you a couple examples of where supply and demand, in this case demand, worked. There's an imbalance of institutional buying there. Because make no doubt about it, people, we, the retail traders and investors, do not control anything. We do not have enough money to make those decisions, to control the price movement in the market. The banks and the big players on Wall Street do. So we, the little people, as I call the peasant farmers, have to do our best to follow these banks and institutions as best as we can. We're not always going to be right. We're going to take losses. That's what we set up the risk management parameters for. But you got a good snapshot of kind of how this all works. Now, here's the deal. I know what kind of people are out there right now. I've been doing this for over a decade. Some people are like, I got no clue what the heck he's talking about. That's okay. Rome wasn't built in a day, brick by brick. There's some people that are like, I got it. No, you don't got it. All right. I'm looking at 30, 40 zones right now on this chart. Easy. Which one's good? Which one's bad? Well, there's a scoring process to that. There's a 6-step scoring process, a 20-point scoring system. Mr. Black does that all within TradePhantoms Pro. So the last thing I'm going to leave you with is this. If you're already a Trade Phantom, then this doesn't apply to you. But if you're new, okay, if you're new and you're coming and you're looking for some kind of formal curriculum, come check us out, all right? We start with a complimentary class on Thursday nights, all right? 7 p.m. EST, either me or Mr. Black will be hosting it. You'll be with us for about 90 minutes. Go to www.tradephantoms.com. This is our webpage right here. All right. You'll see the free live trading and investing workshop. You'll just click on the register here button. It won't make you do this. It's just, oh, I'm sorry. So right here, first name, email, phone number if you're comfortable. I actually personally reach out and text everybody from my own personal number just to kind of say welcome, and you'll get an email and all that stuff. All right, the next class is this Thursday, so you got plenty of time to register for it. It does fill up, so I recommend trying to get into it, even though it's virtual. You know, we only keep so many people in it. 7 p.m. EST, and here down below is what we're going to be covering. All right, how the markets really work. I just talked about that, supply and demand, right? When there's more buying than selling, price will go up. When there's more selling than buying, price will go down. All right. How professionals analyze the market and trade, right? That's that institutional order flow strategy. We didn't get a heavy chance to talk about it, but trading in multiple different directions, up, down, sideways, diagonal, no, up, down, and sideways. Look, at sometimes when the market goes down, it goes down for years. That's what crashes and corrections are for. You cannot be in a position to not make money in the market for multiple years. Don't give me that old saying, oh, it's going to turn around, Mr. Green. Yeah, of course it is. But are you going to not make money for 2 years? That's crazy. You wouldn't work for free for 2 years. So why would you do that with your trading and investing? You wouldn't. So we're going to talk about short selling, sideways movements, okay? How to grow small accounts into larger accounts, all right? By using leverage, all right? Leverage is super important, all right? We also want to use proper risk management too as well. All right. So two common fears that people have coming into this business are fear of losing money, of course, and fear of not having enough to get started. Hopefully, by the time you go through this class, we can start to overcome some of these fears, right? Knowing how much we're going to make or lose before we trade, invest, before we get in with the bracket order. And then also the other key component is the risk management, all right? And is it all about stocks? Of course not. Start calling these asset classes, all right? Start calling these, appreciate it, man. Appreciate it, Smoke and Mirrors. Thank you for the compliment, man. You know, one of these things that you want to look at here, okay, is very important. It's called the financial markets, not the stock market. Stocks is just one of many tools, asset classes, as we like to call them, within these markets. There's foreign exchange, there's futures, there's options, there's cryptocurrencies, there's ETFs, there's bonds, right? What works best for you? That's the key. What works best for you? So part of people, you know, when they come to this complimentary class, okay, my man Ron, part of these people when they come to this complimentary class is they have the ability to decide, you know, do they want to continue on? Some of you may continue on, some of you may not. You're still going to learn a lot in the complimentary class. If we're the right fit, though, and you move forward, one-on-one mentorship and working with members is essential in helping them figure out which one of these assets are best suited for them, because some markets are 24 hours. Some markets allow you to start with less capital. Some markets are better for certain type of people that make certain decisions. Some people are snap decision makers. Some people are, they take a little longer to make them. That's what our job is, me, Mr. Black, and Mr. Blue, that we work together on that. Last but not least, trading for income versus wealth management. So we want to talk a lot about, we want to talk a lot about what the difference is. Income is day to day, week to week, month to month. Wealth management, all right, is going to be longer term. So these are all the things that that we go over, all right. Come check us out. I hope to see you in there. That's going to be it for me today. I will, we will keep this up as a recording, but hopefully this gave you some insight on how professionals trade and work in the market. And other than that, have a great day. Have a safe day. And for my people that are already Trade Phantoms, I shall see you in the classroom tomorrow. For those of you that aren't, I hope you sign up for the class. And if you don't sign up for the class, that's cool too. Whatever works for you. Other than that, have a great day. Take care. Bye-bye.